you have nothing to risk. Sign up today.
The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, joined by this morning our man Basil Chapman, filling in for Tom. Basil, good Monday morning.
Good Monday morning to you. How are you?
I'm doing fantastic, man. We'll jump right into these prices. Positive markets to kick off Monday trading. S&P is now up 23 points, trading at 3287. NQ futures up 148, 11,038. I think we got all-time highs this morning in the Qs, Basil. Dow up 212 points, 26,531. You get the gold contract down a bit off $7 at 1978. Silver up 7 pennies at 24.29. And notes and bonds a little bit of lower price and higher yield. The 10-year off about 5 ticks at 139.29. The 30-year off about 27 at 181.14. We'll start it off with the bonds. Bonds in that higher range, though, off a bit today, still 139.29 compared to where we've been anytime really on this COVID. 139.22 were the highs we were comfortable with there. And I got to start it off, Basil, before we get into it, with a couple charts of Apple and Microsoft. Apple shares right now up 4.6%, up almost $20 at $444.53. That's after trading, folks. Let's see what we were at on Thursday. How about 375 just on Thursday? We were at 410 middle of the day on Friday. We're approaching 450. And Microsoft shares as well, up about 3.8%. We were at 199 on Friday. Talk about an acceleration in both those stocks. Basil, what do you got going on in a market where higher prices, man? Big week of earnings last week. Tech delivered and continuing today. What are you looking at this morning?
So just briefly, I just want to show this chart here. In the chapter wave methodology, we try to identify the lowest low bar, and then we count each successively higher peak. You can go up to 7 higher peaks, a peak G, they're alphabetized sequentially, A, B, C, D, E, F, G. But it's at that fourth highest peak that other things can happen. It's as simple as that, and it goes way back to when I used to hand chart using pencil and ruler on engineering paper. But that's when I found the 7-wave form initially, and then I found you could actually go higher. But it's at that peak D that other things can happen. Now, if you're looking at the QQQ, I've been anticipating that there will be a weekly leg D. And when you get to leg D, that's where I start to look at what is overbought, what is probably, my thinking was that peak C about from last week, the week before we made that high of 269.79, I thought it would last a little bit more than 1 week. I thought it would last maybe 3 weeks, and then we come back. But we just pulled back barely last week, and this very morning we went 20 cents above the all-time high. So now at 269.99, the QQQ Invesco Trust Series has made an all-time high. It has gotten to that leg D. But if you look at this weekly chart, which is in the middle, the MACD, the moving average, is still very strong. The stochastic's flat at 87. That's very good. Unbalanced volume is something crazy is going on. I think I understand it because you've got just a handful of leaders in the Qs, and I think that's why the unbalanced volume is so weak. But the two moving averages that I think are really important, the 9, the green one, and the 14, the black one, are still holding very strongly with the price way above. So that says I've got to look at a shorter term. So this is going to be very important. How we close this coming Friday will be very important because now we've achieved leg D in the monthly, and we finally got that leg D in the weekly chart. So just to sum up, I think the Qs still are the leaders. We're still looking at what the Qs are, up 1.31%. Everything else is up much less, and they're the leaders, and we'll have to see what happens. And you were talking about bonds. My thinking here is that the yields could actually start to rally a little bit, and if there's this H that goes to an M pattern in the weekly chart. If that works out, I think we might see the XLF have a little bit more of a rally. It's struggling right now. That's the S&P Financial Spider Fund. So I'm watching that also very closely.
Yeah, I pulled up Bank of America. Bank of America popping. They're up 1.5% today. I was following them last week, of course. Quite the position Warren Buffett, Berkshire took in there. So a nice start to the week for the banks. As we see. I mean, that note market. That might have been It's just so fascinating, Basil, how we can have such high prices in notes with such low yields, even extending above the highs that we've had all this time in terms of the price. We're now approaching about 0.56. Maybe we've risen a bit in yield as we've gotten a little bit of a pullback in price today. But that is correlating with a NASDAQ that only goes up in dramatic fashion. And now we're approaching the S&Ps at about almost 100 points from the all-time highs as well. A basket of 500 stocks, and those tech stocks, not quite the impact, but still, whether it's 15 to 20% of that market cap in there.
So I'm just having a quick look, 33.33. So this is a leg D in the junk market. JNK, it's called the Spider, Barclays. What is that? Something. It's a very tiny print. Anyway, it's a fun. So I'm looking at this and saying, okay, watch this real closely. We're only in the leg C in the weekly chart, but I'm watching to see the interplay of August. First of all, of July has been really remarkable. Larry Pesavento showed the difference between what the leading stocks were doing, helping if they included in the S&P and what they are if they're excluded. And it shows a very big divergence. But one thing I wanted to do, if we've got a moment, I have a question. And the question is, July's just gone by. You've been involved both through your own work and through your mathematical look at playing various card games. And you've finally got yourself a newsletter. You've a well-deserved learning period. My question to you is, what in your background has come together to allow you to feel so comfortable in doing the newsletter? And I have to congratulate you because I've watched you over the 10, 12 years or more. Actually, it's about 15 years. How you've grown to really become very comfortable with the market. It's like second nature now. So my question to you is, what's your background to get to this point?
Well, I got some great shoes and some great examples to follow. My dad, of course, starting out with number one, but the hosts and the listeners at TFNN. So I've been fortunate to do this, right? Started the program. Man, I'm going to have to look into it, Basil. Time is crazy. I mean, I think I'm approaching a year or more of doing the show, somewhere around that ballpark, which is fascinating, approaching a year at least, because I know I was doing it at the holidays. And, living and breathing the market and, probabilities. And that's where, my love of the game of poker, for sure, because it's probabilities, it's analysis, it's risk reward, especially tournament poker, factoring in risk reward, staying alive, and what comes into all of that. And just live and breathe in the market every day, talking to friends, talking to family, advising people just in my own life, right, of things I'm seeing, what's going on, how to capitalize, whether it's short term or long term, on some of the possibilities going on, that I thought I had enough value, that I really believed in that value to offer it up to the listeners and the subscribers beyond what I do on the program. And so that was kind of the mentality. And we kicked it off 3 weeks ago. Volatility is in spades, that's for sure, man. We'll see how it goes, but it's the beginning of a journey, and you got to start somewhere, right?
And I've got a follow-up question when we get back.
Perfect. All right, folks, stay tuned. S&P's up 25 points. NASDAQ futures up 136. Basil and I will be right back in 3 minutes. Stay tuned.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. S&P is positive by 25 points, 32.89. This market, that's 0.8% in the positive, folks. You have the NASDAQ up 142 and the Dow up 236. So, Basil, continuing the conversation, where did we leave off?
So we left off with me about to ask you a question. It's really it's a part of statement, but it's a statement that I'd like a comment on. And really, this, I think, when I look at the Dow, I call it the Dow 30 because for a long time it hasn't been an industrial, although it's called the Dow Jones Industrial Average. So it's really, for me, it's a perfect mix of everything, which means it'll lag the high techs, because the high techs are the force de jour, and they just taking 5, 6, 7, 8, 10 stocks are taking, but the Dow is the real mix, and that's going to tell us a great deal of information later on. But when I put that together, I was thinking over the weekend, the background that you've developed, which is both a mathematical one, and you've been able to observe through your dad and through many other areas. There's a fundamental side that I've listened to your program, and you're very articulate in talking about the fundamentals. I'm beginning to think that we're coming right into a perfect mix of where the mathematical, the equation that really is part of, very much part of the stock market, and the other side, which is trying to put the fundamentals together, are coming together. And my question to you, that's part of statement, and now the question is, are you finding that in your work? Because you really, I can tell you really do like to mix the fundamentals with the technicals.
Yeah, I would completely agree. There's my answer. No, yes, I would, because the shift's going on. Now, you can still be, listening to Larry's show, which is great, right? He says, being a long-term investor is so hard because there's so many things going on, and you can't believe that you're always right, folks, because that's the one thing that hopefully, if you didn't learn it before COVID, you can always be wrong in any time frame, because the moves that these stocks had, Basil, as we all know, just so dramatic that unless you planned on holding them forever, any type of a stop loss might have been destroyed before the stock rebounded and almost doubled, like in the case of something even as strong as a company like Amazon, right? Which we know is going nowhere. They're not going bankrupt, and somehow the stock goes to all different facets of the depths that it went to. Fundamentally, though, when you combine that with some of the technicals, and the great thing about the volatility going on in the market right now is you are getting these huge swings, right? And I'm sure in your work you're getting whether it's peaks and troughs as the market moves, just even Fibonacci moves that I like a lot, and then the channels that we're creating that the stocks are able to move up and down into. But the real shifts going on in this market, man, is, as we all know, pretty dramatic. And if you can try and factor some of those shifts into things, then I think it can increase the probabilities, especially as you look at different time frames as things approach.
Good. So good. And best of luck with your newsletter. I'm sure it's going to be great. I
appreciate it. Well, I appreciate it always, man. Hey, how about natural gas? We had a question in the YouTube Tiger's Den. Quite a move today for natural gas, and talking about maybe if it has any length to go higher. What do you look at when you look at this natural gas contract?
So I like what I see very much. When I was looking at the different commodities over the weekend, this natural gas was right on the cusp of saying, okay, this is a very important moment because it could arch over. I'm always looking at the arch or cup formation. But if it takes out the high of the 29th of July, which was at 1.856 on the continuous, 1.937 on the continuous contract, I thought to myself, wow, that becomes what I call an overlapping potential wave. You've got a peak A and a peak B, which failed in the sense that it pulled back, didn't take out the low of June, but it started to rally. If you get a parallel movement, in other words, there's an overlap of that peak B that was pulling back and another peak B, and now you've got your leg C that has these two streams of energy. Talking about natural gas, you got your energy, and we're bumping right now into Chapman Wave inside wedge resistance. I like this very much, and it fits together with what I've been looking at for subscribers in the sense that we have gone along. We haven't done this for quite a while. We had been along the DBC, which had oil, that's a fund, but the DBA is a different vehicle altogether. It is a commodity index, a commodity fund, and it has wheat, soybeans, it has corn. And I'm looking and I'm thinking, you know what? If we've already had the big move in gold, which is now probably getting a little tired, might have to have a bit of a rest, but is still in the category of both fear and commodities, maybe now we're going to start seeing some of the other commodities pick up, and I wouldn't be surprised. You see, what's interesting when you and Tom are looking at 10:30 on whatever day it is, you're looking at the different futures, the crude oil.
Yes, crude on Wednesdays and natural gas on Thursdays. Go for
Thursday, right. So I'm always looking at that, and very often we've seen that when crude oil rallies, natural gas actually pulls back. You think they go together, but they often go in counterpoint, not the same percentage move, but just directionally. So crude oil to me looks like it's in a high-level consolidation, and therefore I think that there is room now. It's August. This is probably still a little early seasonally, but I think that this is moving very nicely. And if natural gas is able to close above the high that was made on the 27th of May of 2.092, I think that it really says it's created a base of support that shouldn't break the weekly 9 and 14 period moving averages of 1.9 and 1.8. So I do like it, and I think it's in this category that says what didn't work before is now having a potential to start working. So I like, and certainly the move today up 12%.
Yeah,
big.
And it's always interesting when you had Buffett coming in there, right, with Berkshire buying a bunch of the assets for natural gas, and that was around the lows almost of about 145 in natural gas, and already remarkable that contract alone up almost 30% as he buys those assets.
And that does give a lot of fund managers some comfort because they feel very strong.
Yes.
Not that Buffett can't make mistakes if you look at airlines, etc. But
yes.
Boy, when he's right, he is so right. I mean,
I would agree, and
I was back. Yeah.
And even just, and he can be wrong, of course, but looking at Bank of America, man, the position that he has taken in Bank of America must take a tremendous amount of conviction, even if it's kind of just a store of value, maybe in this type of environment, especially as well. But nonetheless, I mean, it's a staggering position.
I was going to say, this is exactly where you're putting the fundamentals and the technicals together, because he does technicals in a completely different way. He doesn't look at I don't think he looks at the chart the way we do, but I think he looks at the charts. He looks at his positions in a very mathematical way. So there's a fundamental side and there's a mathematical side. And I agree. I think that the banks, they've done everything right. I mean, and they're always the ones that do the things absolutely wrong at the top. They did it in 2008 and 9. They did it in 2000, 1987. You can just keep going back. So this time, I was just going to add in there, Basil, the fundamental side of things, right? If you pick a company that maybe they're struggling right now, but you know they have growth opportunities where things are exploding online, you know they have the cash to make it through the next year or two, long term, that's where you add that into and
things.
And they have Merrill Lynch part of it, and the Merrill Lynch brokerage part of it. Yep.
Stay tuned, folks. Basil and I coming back in 3 minutes. We'll be right back.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Markets holding steady in positive territory. S&P is right at that positive 23 points, 32.87, and NASDAQ futures up 140. Big week of earnings, of course, Basil. We got a lot of equities. Some of the stocks moving this morning. Just jumping over Clorox. It was interesting. I don't know if you saw the action. We were up higher. It looked like they beat to 245. Down now to 232, negative about 2%. And then Google investing in ADT to merge for security. ADT up 77% on that deal today, up to about 15.27. We get Disney earnings this week, stock I like to follow. Disney down about 0.2% today. And we get Uber earnings as well. This week, Uber up about 1% with the market. And to pull the numbers up, I'm just going to show a graphic in here, Basil, real quick. Where are we? There we are. Earnings this week, ton of stocks in there in terms of who we're getting. Tomorrow, as I mentioned, we get Disney. Where are we? We there? Yes, Disney. We also get Beyond Meat, Match Group, Activision Blizzard, Allstate, Twilio, Wynn Resorts on Wednesday. Some of the interesting ones, CVS, Wayfair, Discovery, Moderna, been in the press a lot with their biotech. And then we get Etsy, Square, Roku. I just bought myself some Rokus recently. And Thursday, some of the ones that jump out at me. Thursday, we do get Uber, Dropbox, Caesars Entertainment, along with TripAdvisor. And then Friday, Eventbrite, AMC Entertainment Holdings, and Kodak, to name a few. Kodak,
okay.
Yes. I know, right? Kodak last week. I'm not sure if you saw the articles over the weekend, Basil. I saw that their executives received a ton of shares like the day before that deal went through as well. So I imagine we're going to hear more about how that came to fruition.
That's going to be interesting, yeah. So there are a couple of things. So Wayfair is a stock that I looked at and I thought, gee, in this environment, the stock looks really interesting. It's online, does everything right. But really, it kind of looked tough. So the low, for anybody listening, Wayfair, the symbol is W. So the week of the 20th of March of this year, you could have bought it anywhere between 21 and 27. It is now 10 times. It is trading up 16 at 282, and even a week and a half ago, when it had that peak D pullback on the daily chart on the 24th, It was at 209, and now it's at 282.
Remarkable.
So there are people that have particular stocks that are just wondering what everybody's fussing about. Who needs a job? Who needs anything? They've just, they've got Apple, they've got Wayfair, whatever it is. And then you can pick fantastic companies, and they've just gone nowhere. And this is the kind of market it's been. It's been very selective. If you're in the right area, it's just been quite remarkable. So my question is, and I happened to choose this just a short while ago. I thought, why don't we look at something like, to put the difficulty of the fundamentals and the technicals together, here's a stock, Six Flags Entertainment. Well, okay. They're in entertainment. Disney's in entertainment. What's the difference? Yes. There's a huge difference. And that's why one stock has gone from 73 a year and a half ago down to the 10, the 15 area. And the other stock, that's Six Flags. And the other stock, because it has such a potpourri of viable products and potential, is Disney. So it's just really interesting. You think you're in the same area and you're picking, but you've got to be very selective. And if you're looking at Disney, yes, it's been struggling. It made an all-time high in the 150s just less than a year ago. And it plummeted down to 80, and now it's at 116. But if you're looking at coming out of this, who's going to survive? They have all the ingredients. It's just after all these decades and decades and decades of being in business, it's the plan. And I think that's really what you have to be looking at. How do they manage what's going on? Do they do it productively? Do they do it in such a way that it enhances the stock share?
Yeah, Disney, it's quite a headache in terms of balancing, right? The rapid growth that they've had for the Disney Plus streaming service. I think they had 54 million subscribers in May. They're going to come out with the numbers tomorrow. And so I imagine they have grown greatly during that time. Of course, 3 months with the summer as well thrown into things with kids home. And then they had the spectacular Hamilton, which maybe drew some subscribers. But man, talk about a Max Payne situation in terms of the parks they have everywhere. Then, which doesn't even get talked about as much for Disney, is the sports and the ESPN and the programming. I mean, we're seeing right now baseball having a problem coming back. Some of my friends talking about even this morning, the feel of sports just different, not quite the same. It almost seems like preseason, they're saying. Is there going to be the same level of attention, right? But as you say, we will get over this hump. If it's in 6 months, a year, or 2 years, we will get over that, and you'll see that come back to normal, and Disney is going nowhere, and they're going to have the online strength. I mean, Disney, folks, aside from my newsletter, All Things Considered, Disney, a strong company. You want a long-term investment, have some exposure to Disney, and I think you'll be okay, because when we get over this hump and parks fill up again and Disney has, 9 figures of subscribers, Basil, very serious, 100 million. They're approaching that number in no time. That's going to be dramatically priced into that product. And the content they have, when I think about it, Star Wars, Marvel, and then you have Donald Duck, Mickey Mouse, Minnie Mouse, right? There's nothing like it out there.
The traditionals, right.
Yeah.
And I'm just showing this chart from 1990. I mean, look at this. It survives. It's a survivor. They do things right, it looks like. I agree. And this is very interesting because this is a case where you have to, on the one hand, you have to do some guessing because we have no idea when.
Sure.
Let's imagine that it takes not just one summer, but it takes 2 full summers before Disney gets back to 90%, let's say, or 85%.
And I would think that's totally real. Yes.
And you just have to look at it in a very different way. And the idea, when people ask me, what's working in the market, what's working is the 21st century stocks like, for instance, a stock like a DocuSign. DocuSign, I mean, even today it's at an all-time high. Why?
Yeah.
Electronic signing. I mean, this is part of the age of this period of the 21st century.
There's no reason we have to be in person. I agree. It just makes too much sense, especially with what's going on.
So here's another part that I thought I'd throw in. When I look at the success of the stock market, which is not the economy, it is the stock market. You have to say there is a very big part that is the economy. And therefore, the question that I have, and I don't know there's no way I could even answer it, but it's a question, is has so much been done through the Fed and other areas that the missing link, those 17 or 18 or 20 million people that are out of work, are not as important right now, or is this going to come to bear later on in the year?
I think the key in what you said, and I agree, would be right now, right? And how that progresses if stimulus dries up and all. Stay tuned, folks. Basil and I come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. S&P is positive by a pretty similar territory, 22 points right now. We get non-farm payrolls on Friday, too, for the month of July. That'll be interesting. I wanted to jump back to Disney for a moment, Basil, because I was looking at something that I found. You know, it's interesting how expectations have been vastly recalibrated with everything going on in some of these companies. You back things up to October of last year. Okay, and the numbers that they were looking for. Now, this article talks about a few different things, but one of the ones is that Disney executives were looking between 60 and 90 million subscribers by 2024. We now know that they had 54 million as of May of 2020. That's how quickly this is accelerated. Now, similar articles written when they came out in May at 54, you're looking at potentially having maybe 200 million is where you could be, 202 million by 2025. So that's the recalibration. Now, you back things up. I have this on a 3-year weekly. This is the pop in April of 2019 when they came out with their pricing plan, Basil. So we're hovering in between about 110 and 120. The world is awaiting what they're going to do. We don't even know what the price is going to be. It could have been $20 a month, right? They could have said, hey, we have so much content we're going to be, but they don't. They come in at, what is it, $7, $6.99 or $7.99 a month. Market loves it. They finally go live in November. Market loves it even more. I think they came out and had millions the first week. And then, of course, COVID hits. But we're right back at these basically Disney Plus levels, which is what I find so surprising, right? So no matter what kind of pain you have over 2 or 3 years, you just saw how vastly overperforming the Disney Plus numbers are going to be. And that's going to be the future once everything recalibrates, you know? And so we're still at those levels. And if you ever said we're going to have 200 million subscribers in the next 3 or 4 years, that's quite a statement from where we were. So that's some of the things that I add into that for that stock, you know?
That's good to know, yeah. So here's the same kind of parallel that we were talking about before. If you look at Home Depot is within fractions of an all-time high.
Yes.
And that makes sense because people have been home and people who have been getting income because they're working at home are actually spending money. I mean, you drive around, certainly where I drive around, the people working in the gardens. A lot of people went to Mahoney's yesterday, was it? Yeah. And this is a garden place here in Massachusetts. And
Nice.
a lot of people were buying very nice things. So those are the areas that managed to work out quite well. And Home Depot, of course, is with Lowe's, they've been dominating the whole scene. So that's really, to me, going from 140 to today's high of 267, and you're talking about building materials, home, electrical, and all that. That speaks to, that's not what you see in a deep recession.
Sure.
So something else is happening. And then
there's a shift.
I saw, I think it was you had, was that Restoration Hardware that were you?
It was. I was waiting just to throw them into the conversation, because same deal kind of with Wayfair you're talking about, right? In terms of outfitting your house, and I talked about in my program where Restoration Hardware especially, right? Very expensive products in there, and so you're gonna benefit from that sector of the society more so, which has been able to keep their employment more so than lower wage workers living paycheck to paycheck. They've been particularly hit hard during all of this going on in that stock.
If you're looking at both stocks, Home Depot or Lowe's, Home Depot, let's say, and Restoration Hardware, the result is the same. So if you're looking at these stocks, you say, wow, people are really spending on the extras, because anything at Restoration Hardware, if it's a lock or whatever, a door handle, it is going to be more expensive. Most of the time, it's going to be not just more, but quite a bit more expensive than Home. So it's selective. But if you look at the chart of Home Depot, they both at highs, all-time highs. So that's why I'm saying this is a lot more complicated than just trying to put numbers together. I think you have to look at what happens afterwards, because we've seen it before. You remember there was this whole thing, what will happen when the Fed finally has to raise rates? Well, we found out what happened is they never have to raise rates, because all around the world there's a competition for the lowest rates. That's part of the whole aura of lower rates, that there's competition. It's almost like a commodity that we're looking at with lower rates. And so when I look at this, it makes it really difficult, because normally you would see people shying away from doing anything where you're spending money because things are not good at all. So this is telling us that whatever has been done thus far has worked to August the 3rd. Up till now, it looks like it's worked. And it's how we come out of it. And I think that's the part that I'm looking at. I'm saying, how do we handle the next phase if, in fact, there's a certain reality? And I think that we have to have, I've got one foot hovering over the brake, the other foot on the accelerator. I'm trying to be very selective, looking at areas that are, for subscribers, that are kind of either under the radar or in very strong sectors before that had been hit by other reasons, but there's a good chance that they could come back. I think you have to be selective now, and also today, having finally gotten to that leg D in the weekly chart, how we come out of this week, I think, is going to be very important, because to me, almost all the criteria.
Go ahead. All the
criteria for what? All the criteria that I look for have been met to this particular point, and that was waiting for the cues to get to that leg D. Look, you got the Dow that has already done a high. The S&P, SPX, theoretically, it's gone from a peak E at 3393.52 the week of 21st of February down to 2191. I would say a 35% decline is pretty much, I think that's our major bear market for the year, I think, has been done. That doesn't mean to say we couldn't consolidate. And if you just got a moment here, I wanted to show a chart that I showed subscribers over the weekend. And this is the chart that I call my dark news cloud covers with a Chapman Wave methodology. And there's a match between August of 2019. The pattern is exact. And there was a square that I drew in there. There was the consolidation. Then there was about a 2-3 week rally, kind of hang in, and then all of a sudden it dropped. But it only dropped halfway between the top that was made back in July of 2019 and the low that was made August the 1st of 2019. So I'm saying, are we here? That's the question I had. Are we in this matching phase? Are we going to start to see some kind of consolidation? And that might coincide maybe with gold, maybe the dollar, which is just starting to turn. Maybe that it starts to rally some. This is, I think, a very important week because for me, almost everything that we'd been looking for has been attained. And now I think you can have the whole thing of the policies. We don't know whether the Republicans and Democrats are going to agree. They could hold up for another week or so. That could be quite decisive if they hold up payments. So I'm saying I'm a little cautious right at this moment.
Cautious is good. This is a dynamic situation. The one thing that I've continually said is, to be on your toes because things are changing dynamically, and hopefully they change one of these days. In terms of so dramatic, we get that great news that a vaccine is coming, but there's going to be some volatility in between. Stay tuned, folks. We'll be right back in 3 minutes. We'll see what else we have on tap for Monday trading. Basil and I'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. S&P is positive by 16 right now. Dow positive by 137. Basil, I want to go over just kind of the COVID numbers real quick because decent numbers coming out of Florida right now. Let me pull it up where we are. So we are looking at the state coming out with their numbers just this morning. Only, and I say only, but only 4,800 cases on yesterday, 7,100 cases on Saturday. Both of those numbers at around 9% positive. When you look at the Florida curve, definitely decreasing. And Basil, I wanted to ask you in Massachusetts, because some of the states that were hit early on actually seeing rises, and they're small numbers, but on July 5th, you had 187 on the 7-day average per day, and we're now above 400. So more than a double since that time. What is life like in Massachusetts right now in terms of masks, social gatherings? Because Florida, you know, yes, some younger people out, but a lot more people wearing masks, which seems to have hopefully helped, confirmed by those numbers. What is life like in Florida, where you're at?
We've been very conservative here, and from what I understand, I some friends who are down on the Cape say that Saturday and Sunday was really busy, especially Sunday.
Okay.
And but otherwise, it's been fairly quiet. So, you know, people want to get out.
Can't blame people wanting to be out, be social. I mean, we're social creatures, folks. I get it. Just be vigilant, because be careful of these curves. You know, Florida we had 15,000 cases at one point, Basil, so we're down to 5. It's encouraging. We're still at 5,000 cases, though, but you hate to see areas where it's now rising, where we had eradicated it. So be safe, wear that mask, social distance when you can, and we'll end it. I see the cues up there, Basil. How about we end the show with the cues on your daily, weekly, and monthly?
Well, there's still some internal strength, but I'm watching it. I want to see Friday's close. I want to see Friday. If the cues close,
and we get non-farm pay. Sorry, I was just in non-farm payrolls Friday to cap things off for some volatility. Basil, thanks so much for filling in for Tom. We look forward to the program at noon.
Thank you, Tommy. You too.
Thank you. Folks, check out the opening call. Basil's coming back in an hour. Live programming all day at